everyone, welcome to the Trading Battle sponsored by 8Cap. Today, we are joined by Jamie Saettele, Chief Strategist of Scandinavian Markets, and John Meli, host of the Forex Master Trading Room. Forex is my wheelhouse. I love to trade it. These guys love to trade it, so I'm looking forward to a great session. Now, Jamie and John are both purely technical traders, which is similar to many of our viewers. They both traded professionally for prop firms and themselves. In one corner, we have Jamie Saettele. He has a long career in FX. I remember the days when we worked together at FXCM and sat next to each other for 3 years working on daily FX. And what I love about Jamie is that he's straightforward, no BS. And 15 years later, he's still trading with the same Elliott wave patterns that he's used from the first day I met him. John used to be a volunteer fighter. He's now in the other corner and a general contractor. But when the recession hit, shrinking his business to nothing, he pivoted and found a new way to support his family. Now he trades and coaches traders for a living. I'm sure our viewers want to hear all about your strategies. And I think the best way is to have both of you walk us through your trades. So today, there'll be 3 challenges. The first one will be what your favorite short-term trade is to kick off this Asia session. Jamie, why don't you go ahead? What trade are you looking at to start the evening?
Well, considering that we are in a rather quiet period of the day, right? So I'm going to look at something that might give us some juice, and I'm going to pivot towards crypto. Notably, we have Ethereum here, and I'll scroll out a little bit. So the lines you see on this chart, this is a channel, goes back to March 2020 low. Right, you can call it the trend line here, and the channel extended off of this high from September. It's a beautiful chart. The levels respect very well. Now let's zoom in a little bit more. Let's go to like a 4-hour chart, right? We just dropped. If this battle would have started, an hour ago, I'd already be up huge. But no, but so we just came into a pretty clean level. You can see here, there's that daily high back here from mid-October. Nailed it, right? So my short term today, starting out this battle, I'm looking to buy Ethereum. And since I'm not a market maker and I don't have to provide liquidity all the time, I'm going to see if I can wait and buy it around this level right here because it's very clean. Look at the highs, look at the lows, and we'll call that like 40, 45, 40, 50, something like that. So that's where my head's at. Look, it just dropped like $10, right? So we're coming close. We're getting close.
Well, you'll have to keep us updated on where that would, if that triggers. If it triggers, where would your stops and limits be?
All right, so 40.40, so 39.58. Let's go 40.40, or sorry, let's say by 40.50. I'll be putting a stop down at like 39.70. Okay, and upside. Again, this is like kind of like how I would trade. I wouldn't be in and out. I would be looking to get to, cost as quickly as possible and start working. But for purposes of this idea in this battle, I'll be looking at this like spike low down here at 42.50. Otherwise, just see what happens throughout the remainder of this battle.
Now, let's talk about your chart. Not often do we see traders focus just on the bar charts and not the candlestick charts. I know when John shares his charts, he's going to show candlestick charts. Most of us use candlestick charts. Can you talk to us a little bit about why you prefer bar charts?
Okay, so good question. Hold on, I'm trying to figure out how to use this. So hold on. Pending order. Okay, here we go. I'm actually going to put in a pending order here. That's what I'm going to do. All right, so I'm going to put in a pending order to buy, let's buy what? 2 of those. Let's say, we'll go back to this first, and then I'll start spouting off. So bar charts, first of all, I do look at both candle and bar. Generally, like I will look at candle when it comes to the end of day stuff. Kind of, you can see, the body, obviously, where the trading open, close, high, low, all that. When it comes to bar, for me, it's just personal preference as far as seeing patterns better. Seeing like, are they 3-wave moves, right? Are there, it just, the candles take away from the underlying pattern to me. That's just a personal preference. I don't think there's any right or wrong way. Like for example, looking at this little drop here, right? You can see 3 waves down, right? From an Elliott point of view, right? If I put on a bar chart, to me, my eye is drawn more to like the big bars. It's just quicker to look at the patterns that way. That's all.
So John, what do you think about that?
I think he has a good point, but I do like price action. That's very important to me. So as long as he's able to decipher the price action, I think it's great.
So with that in mind, why don't you share your trade? I mean, Jamie's here looking at 1-minute charts. I know that you are often in and out of the markets fairly quickly. You like to scalp a lot. You're in the shorter time frames as well. What are you looking at, and what time frames do you like to follow?
I like to look at the 1 hour to start out. I like to see if we have a trend. I can see we have a 20 underneath the 50. That's telling me we're trending down, and we're starting to pull back up into the 50, which I'm looking for this to actually bounce down and carry this on down, probably down to this trend line somewhere in here is what I'm looking for.
So basically you're looking to sell euro right now? Is this the euro? This is the euro dollar chart. Are you looking to sell euro?
Dollar, very simple. We have dollar strong, so that's why I'm going that direction.
So you are selling at market with a target of 112.14?
Correct.
And where would your stop be?
My stop would go probably 30 pips up, maybe right in here. We can mark that real quick. Let me grab it.
I mean, that's a pretty big move for the first trade, where you're looking for more than 100-point drop in the euro dollar, and with the 30-point stop. Is that normally the way you trade?
Yep, that's the way we go.
And so, how long does it typically take for these trades to work out? Like how long? How often do you spend trading?
Well, I'm going to go for the 3 hours into the session. After that, whatever it goes, I will close it down and then reassess. I like to trade the first 3 hours of any open session. I think that's important, not to get stuck in between other sessions.
Okay, so realistically, I'm a trader, Jamie's a trader, you're a trader. In the first 3 hours from now, which is, whatever part of the world you're in New York Eastern time, it'd be 11:30. Realistically, there's almost a 0 chance euro dollar is going from 113.60 to 112.14. So, I mean, unless
no, but we're going that direction. I plan on getting something this direction, so we'll see.
So
I don't know. Nobody knows how far it's going to go.
Will you exit the entire position?
Yeah, of course. There's no reason to keep that going. So going into Frankfurt, we could rechange and go back up, and then I'm going to lose. So
112.14 is just kind of a far out there target.
This is where this is where we think it would like to go. But whenever we get the wow factor, you get enough money, I'm closing the trade. That's all there is to it.
Okay, so what are these red boxes?
These red boxes to me are structure. This is an area where we have resistance underneath, and until you pass them, they become support. That's where I decide whether or not which way we're going to trade, which way we're going to go. So as we're underneath here, I want to trade it down. If we break above this and close, my trade's over with. We're probably going to be going up, and that's what's really important to me.
So you don't interpret it as if the bottom of the box is a potential or a good area to exit the trade?
No.
So it's just the zone of
down here because
John, are those like
get a bounce?
Are those frankly like kind of like congestion zones, or like are those yeah, okay, that's what it looks like.
Yeah, that's what I look at them. I just look at this as an area of support and resistance. The top is going to be support, the bottom's resistance. But once we cross underneath the top, that line becomes resistance. So this whole thing is resistance. So until we break back up, we don't have support again. But we need to break the bottom to be able to keep going. As long as we're in here, we're going sideways. This means nothing to me.
Yeah.
We need to break up or break down.
I hear you.
Hopefully that makes some sense.
No, absolutely.
So the lines are moving averages?
These lines up in here, yes. I got the 200, the 50, the 20, and the 9. And we have something called an A+ trade, which I like to trade. Basically, it comes up here in the very beginning, where we like to catch it. It actually goes underneath the 20, closes, and when we have a little gap on the 9, we will trade that down as long as we're underneath the 50, which we are. And you would trade that down till you actually close above the 9 again. Then I would exit at this point, and wait for it to continue. As long as my RSI, my slow RSI is my 14 is underneath the 50 and my fast is underneath the slow, then I can jump in this trade again and trade it back down, which I could still be in this trade until right about here. It looks like it was closing out for me right there. So I'm looking for this to continue back down again.
So what happens when you have an A+ trade? Does that mean that you will increase your position size? Because you mentioned that you trade specific sessions. So, for example, you're starting off the Asia session and you'll trade for 3 hours. In that time, you may or may not have an A+ signal when you're opening your charts and looking for the trade. If you did, how would that change your positioning?
Well, actually on the 15-minute where I like to trade, I do have an A+ trade. And we just pulled down, we're below here. So I'm going to trade this down until we get a bounce back up, and then I can put in another position. I like to add on as many positions as I can hold. So that's the name of the game, is keep adding as you're going. And if the market pulls back, I start pulling positions off so I don't get caught with too many positions. And I will move the stop down accordingly as far as keeping far enough back, probably like 30 pips.
So how do you add, where and how do you add positions? Because you're saying that as the position moves in your favor, you will add position, you will add, more positions. But what does that mean?
That means we go back to these boxes right here, and we can see we have one right here. Just to draw some on here. This to me is a structure box. Once we break this, the trade begins down. I see another one right here because we have an L right here. So I'm going to put another one right there. So when we run into this, I need to be careful that we don't bounce back up, because we're going to have support right here and right here. But once we break this, this becomes resistance, and I'm going to add on to it. So if I purchase the trade higher, once we break this bottom, I would add on to it here, continue down. We would bounce around, hopefully break down. And then once we break the bottom, I would add again. And then as we keep going, there's another one right down here. And I would keep doing the sequence on and on and on, if I'm that lucky. Usually we're never that lucky lately. And especially in the Asian market, we're lucky to make $500, I would think. So
it sounds like, correct me if I'm wrong, that you're much more of a momentum continuation trader. Is that right?
Correct. Yeah. Yes, that's where the money's at.
Jamie, would you consider yourself a momentum continuation trader, or someone who's looking to pick tops and bottoms?
Look, there's a combo when it comes to there is, like, I'll give you, let's do an example with what we're looking at right now on this Ethereum chart. Okay, so actually there's a better example on a more important time scale. This is Bitcoin. All right, so Bitcoin. So what we have here, I was explaining earlier before this that we were talking about channels and whatnot, which are part of those are pitchforks, channels, trend lines, what have you. They all fall under the same umbrella as far as I'm concerned. So there are times when I will trade momentum and go with the direction that the underlying is going at that time. And one is Bitcoin here today. So you established, right? People talk about let's get a little paint job here, a little paintbrush. Where's the paintbrush? Everyone looks at markets, or a lot of people, support resistance like this, right? Horizontal. It's the same thing on an angle, right? On a channel. That's what this is. So we established support on this median line or center line or whatever you want to call it, right? This was, I guess, yesterday or the 16th. So a couple days ago during Europe. And then again yesterday during Europe, we bounced. At that point, I was looking for this old line here, which was formerly support. At that point, I would have been fading or picking a top, as you say. But once we went through this, then I go with the momentum. So it's not necessarily being momentum trader for me, or being, contrarian or pick, ranges or all that. It's kind of, I'm trying to get in tune with the market. Is the market saying I should fade it, or is the market saying I should go with it? So it's very much individual, situations. They're all different. They're all unique.
Good stuff. That makes a lot of sense. So now what I want to do is I want both of you to take a look at an instrument that you don't normally trade. And since you're both technical, I don't think it really matters all that much, right? Because a chart is a chart. And talk us through why you like the trade, what direction you want to trade it in, and some key levels and stops and limits. I want you to put these as market trades because I know that John's got a at market euro dollar trade. Jamie, you're waiting for a level, so you're not in a trade yet.
I have it in there. It's in there. I got it in there. But yeah, all right, fine.
So
whatever you say, Kathy.
Back to the old days, right?
You're not my boss anymore.
So John, since Jamie kicked off,
Yes.
why don't you go ahead?
Okay, are we going to pick probably a crypto? I would think I'm not into too much crypto, so would that be good?
Yeah, I mean, crypto is hot button topic these days. So we took a look at Ethereum, we took a look at Bitcoin. Everyone's watching these.
Okay, let's see where they're at. Even on, I don't even know where they're at. Let's see. There's gold, metals. These are all, looks like they're all stocks. I
see BTC. You just scanned right past it.
Do.
Right, I think it's right below.
Good.
Oh, there's Ethereum right there under dollar yen. Why don't you look at Ethereum?
There we go. We'll take that one.
And this will be really interesting because Jamie is an Ethereum trade. So taking a fresh look at it, it'll be interesting to see how John feels about this.
I'm going to do, and I don't have really even any idea what this thing is, but they're all cryptos, right? Hold on. There's that one. There is.
Well,
that's stupid. Hold on. I'm going to look at one more thing. Okay, I'm going to look at this one.
Okay, hold on, Jamie. You're hijacking John's trade. All right.
Oh, my bad. I'm sorry. I'm in my own world.
Oh, that's okay.
John, you go
first.
first.
I'm still thinking. So we got a big move down on Ethereum right here. I can see down here we're heading down to the 50. We should get a bounce probably at this point and go back up. We got the slow RSI, which is underneath the 50. That's telling me that we're selling. Until that goes back up, I really don't want to sell this. I don't want to buy it. I want to keep selling it. We got the fast RSI below the slow, which means we have bearish momentum. So I'm actually looking for this to continue down. Let's see. We're probably going to go down to the 200 is my guess. So I would want to sell this down to the 200. That would be what I would want to do.
And is this one of your A+ trades? I see the little white arrow showing up.
Well, we're actually on a large time frame. What I'm looking for is this to go down, and then we can go back to the 15-minute and see if that's where I trade it. And we don't actually have one yet. We're going to have one set up. We have actually an A+ to the top, but it's starting to end. We're pulling back down, and due to price action, I'm seeing this pull back down, pulling up here. I'm waiting for this to collapse. That's my guess. We're going to come back down to the bottom. So just looking at the market, getting a feel of where we're going. Because we're underneath this 50, we pulled back up to retest. I'm looking to sell this back down. Probably if you follow this trend line down, it's probably where it's going. That is what I would be looking at, probably from right here to, if I can get it to work, come back. There we go. Here to somewhere right here. I'd want to sell it to here, but I think it's going to go deeper. I think we're going all the way to somewhere a little bit lower. So I'd have to go put another trend line on that. So I think if we go to the higher time frame, we can figure that out. Let me just put a marker on it so I can see where that's at. If I get the marker, we got a marker here. Let me go back up to at least a 1 hour chart and see what's going on. 1 hour chart says we're selling. I like this. We got a close and reverse off the 20. We bounced off the 20. We had an A+ trade at this point. We pulled back down. We bounced up, pulled back down, bounced up. So we got impulse, correction, impulse. I'm expecting correction down to here. If not, maybe a little bit further, but for sure down to here. I like this spot right there. That's what I want to do.
All right. So can you go ahead and place that order with the stop? Where would you put your stop?
Oh, just above it, right above it.
Okay. So now, Jamie, what are you looking at? Are you sticking with crypto?
Yeah, I mean, I am. Again, something that we don't trade, right? So that's what I'll do. And this is Solana. Is that how you say it?
Yep.
Okay. So I don't know. Have you traded this, Kathy? Solana?
I have, and it moves nicely. It's not doing as well. It doesn't hold up. It has greater trend continuation than Bitcoin and Ethereum.
Okay. All right. Well, here's what I'm going to do. First, I'll say here why I'm doing this. We're going to go kind of technical top down. So look at that trend line, right? Okay. That's a daily chart. Now let's go to a 60-minute chart and let's put on one of those little forks. And here you go. This is a channel. Okay. So the target for, I'm going to buy this, but you said I have to do it at market. I can't do it 196.
No, you have to go at market.
Okay, fine. So the upside here is going to be let's call it 208.50 because that was former support. We broke it. Now it's going to be resistance. At that point, the real trade here to me is actually, for the way I do this, is you look to sell up here, right? That's where the bigger move is. But if we change this from a channel to a fork, you can see what we hit. Okay, same level. We're looking for those lows, 210. So I'm going to buy this. And I guess, I don't know, I'm trying to size it here. I'll buy I'll risk. I'm just going to risk to that low, 192. So we're trading let's call it 199. So 7 will go. All right. We will buy at market. Stop loss is going to be 192. And the target is going to be 209. Okay, I'm buying it right now. There you go.
Okay, so I think, both of our traders have been pretty clear in their strategies. John is a continuation momentum trader who trades, when there's a breakout of a congestion zone, he kind of follows that move. Jamie will trade one of two ways. Either he'll wait for, a retracement off of, a big move and ride that continuation, or he'll trade breakouts and continue off of that. So we all of us know, all of us have been in the market for a very long time. We know that the trading strategy itself is not the most important thing. There's a lot of elements that are involved in trading that really determine whether traders are successful or not. And one of that is really the trade management. So let's talk a little bit about that. Let's talk a little bit about whether both of you either enter positions, all at once, or do you scale in, scale out? Do you have multiple positions, or do you look at it on a very singular basis? I mean, John, do you want to go ahead and start?
Sure. I like to scale in small. Small to me is one lot. And then when I get into a spot, like where are we at? We're on a 1 hour chart. Let me go back down to a 15-minute chart. As we break through these moving averages, I'm going to add on 5 lots or whatever I could on Ethereum. I'm not really sure what I can do on that yet. So I would want to definitely add on at least another lot to trade this back down to have multiple positions coming on there. But I need to have this position into profit. We do have structure right here, I see. So as we get past these moving averages, I definitely want to get into this. We do have an area of structure down here at the bottom that I'm dealing with right here. That is right here. And that could easily bounce there. So I need to be careful at this point and at these 2 points to make sure we get through. So that's where I'm at right now. And if we break the tops up here, I definitely want to exit the trade. It's not going my way. So, I mean, it could still bounce in the 50, but I'd rather get out with as little damage as possible because I need to be able to trade the next day. I can't have big losses.
What about you,
Hopefully
Jamie?
that makes a little sense.
Yeah, no, that makes a lot of sense. Well, so these very short-term trades, something I usually wouldn't do, but everything for me is about the initial risk. So it's very, very focused on the entry and the stop losses in, and that will take care of itself, right? So winners, right? They don't take care of themselves. You get a big move. I don't like necessarily trailing stops because you'll get shaken out of positions. At least that's my experience. So I will take partial. I am not very good at adding to trades, winning trades. If that's something I really need to work on and figure out more of a systematic way to do it. But when I do my analysis, end of day stuff, and have my levels mapped out, there are more important levels than others. The very important levels I call decision points. And that's where I want to make a decision. right? It's where I think the market's going to make a decision. So that's where I want to make a decision. In the case of like, let's go back to this Bitcoin chart. I don't know if my screen's on or not, but in the case of this Bitcoin chart, like the huge decision level is this old high in this trend line, which is like 53,000. That's where I want to trade. And going into it, it's support because it's below the market. So support is support until it's broken. But if we break it, I look for support to become resistance. So it could change my mind very quickly depending on what happens, especially if it's a fast market. So that's the best way I could put it.
Yeah, I like that.
That's good. Yeah, that's good stuff. Now, John, you do something that's very interesting. I know that trader psychology is always something that many new and even seasoned traders struggle with. So from what I understand, you have multiple accounts, right? You kind of focus your trading on one account, and then you have other accounts that copy them. So you kind of trick your own head to focus on the smaller account size, while your reality, you're trading a larger account size. Can you talk a little bit more about that?
Yeah, well, what happens is for me, it's easy to come in the market and maybe make $500, but it's hard to make $3,000. So if you can have, 3 accounts, 4 accounts, you're able to quadruple that. So that's the idea, very easily with low stress. And see, right now, when you get into a prop firm, it's very difficult to pass. You need to hit a 10% value with only losing 4% per day. And that's actually very challenging, but yet you have to learn to stack your trades so you can get there. But it needs to be on a trending move so you don't get caught. And if you do get caught, you need to be able to get out quick. Like you say, you need to manage your losses. So as it comes back at you, before it hits zero, you better be out of that last trade you stacked, and so forth and so on. So, but we want to continue with the trend if we can. But the idea is to get past the initial, the difficulty of a prop firm. And then after that, it's a whole different reality. Now you can trade for $100, $200 a day. If you're doing 3 different multiple accounts, that's $600 a day times 20 days. That's a lot of money. So that's how I look at it. And that's what I try to give everybody an idea that that's the goal for where we're trying to go. And not only do you have to have prop firms, as you make money, you can have your own accounts, personal accounts. You can go over here and put in maybe 3 of your own personal accounts, have $10,000 a piece. As you build those, go to 20,000. But the idea is now you're going 6 times that 200. Now imagine the kind of potential that you can make out there.
So in that type of structure, how do you withdraw funds? At what point do you psychologically, so you start off with your initial 5,000 accounts. Is there certain accounts that you take the money out of? Is there, how do you start fresh without your current account growing too large for you not to be able to handle it psychologically?
Well, usually I have between $100,000 and $200,000 accounts. And what I do is every month I just pick one and I get paid from that and roll it over to the next one. So what happens is while you're getting paid, you can't trade for 3 days. And you know what it's like not to trade for 3 days when you see your favorite setup going. So I know Jay may be going crazy over there. So you gotta be able to have one still to trade. And if you have a multiple, you're okay. You can maybe get paid on 2, let one run. And then as you get done, the next month you get paid on the other. So works out really well. And you can do that with your own personal accounts. It doesn't have to be prop firm. You can have 3 of your own personal accounts, like you said, $5,000. You get paid on one, you let the other 2 rotate through, and then just keep rotating as you go. And you just keep making the money, but there's less stress. You're able to be stress-free. And that's the problem with trading. If you have too much stress, you're never going to make it.
I think that's a very interesting approach, because a lot of our viewers and a lot of people in general probably don't think about it like that. They just put all their money into one account and they struggle with the numbers that are showing up, either the losses being too large or the profits, not knowing what to do with their profits. So being able to split them up into accounts where you can't necessarily see and trick your own brain, I think in some ways could be the method to the madness that really helps you, continue to trade without, being psychologically hobbled by, too large of positions. Jamie, money management, psychology. What do you think?
And you have much more confidence.
Yes, I think confidence is really the key. What do you think? New traders. What kind of advice do you have for new traders in terms of dealing with some of the psychological barriers that they'll, inevitably have?
Well, from personal experience, a lot of that stress, right? The stress comes from uncertainty, right? Uncertainty, first of all, it's out of your control what happens in the market. but you do have control over
I think we
how
froze
you
here.
approach.
I'm hearing you fine.
Oh, okay. We do have control over, how you approach the market, and what kind of trader you're going to be, how you're going to trade. Right? We've been doing this battle, and John and I, although we're both like totally technical, we're very different, right, in the way we trade. You have to be comfortable with the way you trade. It's got to fit your personality. Like my trades, I go through my stats. I have like literally, it could be any given year 30 to 40% winning trades. The rest are losers. That kind of sucks, right? But like the winners are 6-1. So that's not going to be for everybody. I'm okay with that. So find something that works for you and don't change it too much, because that's when you get into the style drift problem. And that's when, your setups aren't working and you think that you have to change.
Yeah, well, you need
right?
to
When
cut
you
your
change,
losses as soon as possible.
well, no, of course, but right when you change your style, right? If you have a thought out style or a thought out process, just because the market's not giving you what, giving you the results you want, then you change, and then, you change to something that doesn't work because the market just changed back and it would have been working, right? The easiest example to give is just like a trend trader or a range trader, right? Someone who's trying to trade these big trends and breakouts, the market isn't giving it to them. It's in a big range. Then they give up and they go to a range trader, and then the market breaks out. So that's, my example would be find something that works for you, that you're comfortable with, that you can, makes you excited to wake up every day, and protect yourself against the style drift.
So speaking of things and styles that you love, let's put that into practice and go into the third challenge, because the first two challenges were a bit uncomfortable. One of the first one is obviously a time frame that, a short-term Asia open time frame you don't necessarily trade and may not be comfortable with. Second one is an instrument that you rarely dabble in. The third one is where we hope you give us the good ideas that's going to set you on top and help you crush your opponents. And the trade that you think will put you on top, when we do the tally for the challenge next week. So John, do you want to go ahead and talk about what the favorite thing that you're looking at right now for the weekend and the week ahead?
Sure. I'm looking for something I think is going to be strong and weak. So we got that here with the pound JPY. We got the JPY being strong. I'm looking for this to continue up. The market where we can see that right now we had an A+ trade right here. It's gathered up, pulled back down. It's still going. We're crossing a triangle trying to go up. We have the RSI, the 14 above the 50, the fast above the slow, where everything looks really good going up. So let's take it back down to a 1 hour, make sure it still looks good. We do have a pullback, which still is fine with me. We're still above the 9. We're above the 20. And the main thing is we're above the 50. As long as we're above the 50, I expect this to continue up. So if we take this down to a 15, you can see right here, we pulled all the way back to hit the 50, like we talked about. We bounced back up. I'm looking for this to continue to go and probably keep going on up. I am looking for the 200s down below, so we're going to have to find previous structure. Let me go back to 4 hour for that. I'm looking for this structure possibly right there at the top, this little area right here, this wick. I'm looking to get all the way to the top of this, if not further. So that's my target, is the top of this right here. That would be right there. And I would purchase right here and hold this for the weekend and see how it goes.
So can you go ahead and place that pound yen buy order into the system so we can add it to our scoreboard? Jamie, what do you like going into, on a longer time frame basis, going into the weekend, the week ahead?
Sure. All right. Well, there's two things, but
and you can put two trades on if you want.
Okay. All right. All right. First of all, let's go to Euro. We'll go to Euro. Right. So Euro, see that blue line here? Actually, let's go to a different cleaner chart. All right, here we go. All right, so this is a daily chart of Euro. We're going to go to a weekly chart because you can't even see it all the way. Trend line, 2014, right? 2018. When we go to the daily, you can see all the action around there in 2020. And that's exactly where we bottomed. So to me, that is constructive and kind of, holding a bullish bias against this low. However, that's not the trade I'm placing. We're going to go to pound, and I'm going to bring up a different chart. This is, we were talking about the futures stuff, and here's that. So here is British pound futures, okay? This blue line right here is volume weighted average price from the March 2020 low. That's exactly where we bottomed. That was last week. So it's ahead of euro a little bit in my the way it's going, right? We just bottomed euro the other day here. We bottomed pound over here. We've got this kind of choppy overlapping drop. It's a great level. Then zooming into the price chart, here's a 4-hour chart. We've got some nice horizontal levels here at about 34.33. I know that there's a bunch of volume down there because on the futures chart, I've got all these volume spikes, if you will, over here. So I'm going to put in order to buy 34, let's call it 34.36 and stop out at 33.90. And I will be letting it run for the week or putting a target at the 136.
So can you explain to us a little bit more on, how you use the volume, how you incorporate it, how you add it to your chart so they can start looking at that as well, and why you think it's so important?
Okay, well, simply that's where that's where the action happened. The volume tells you that there's a vested interest in whatever that price was. So it's kind of an announcement that something's happened. Right when the market's dull, there's not a lot happening. There's not a lot of volume. Right. I did a study a long time ago. It's probably when we were working together. It actually compared to the correlation between range and volume. So they were very close. Like if you just put on like a chart of ATR, one ATR with a volume chart, they look very similar. So you could honestly just use ATR as well. Although I haven't done the tests and the studies on this, but it makes sense, right? The more activity, the bigger the range, the more important the price action, right? The more likely it is that it has either a reversal or a breakout or capitulation, if you will. So let's just look at a couple examples on this chart, and let's give it to a daily chart. So I'm going to delete some of this stuff. Okay, so high volume days here in purple, but we're going to get rid of that. What we have here are reversal days. Average volume 20 days has to be at least 1.5 times on the way down and 1.5 times on the way up. And that's where you're going to get these bars. So let's just see where that comes in. So we'll put that in there. Let's go 1.5, 1.5 at a 50-day low. Okay, you don't get a lot of them. So we had one over here, right? These are daily signals. These are rare, okay? It's just a piece of the puzzle. So you tend to get some pretty good signals with that stuff. And then after that, again, these are end-of-day scans. After that, I go into kind of the analysis of the levels and where I want to actually be buying and selling and all that stuff. That's a 2-day volume reversal. So the idea being the market tanked, broke out or broke down, and then the immediate next bar was in the opposite direction, also on high volume, right? So you're trying to identify traps. In this case, you have a 1-day volume reversal. 1-day volume reversals actually mark the high of the year. So this is just a 1-day. You trade to a new high or a new low, and then you reverse, and you have high volume that bar. Okay, you can see all the bars here. Obviously, Brexit is a little out there, a little different, but you can see the sell signals, sell, buy, what have you. So obviously, this requires a lot of patience because you might get a couple signals per year. But I also will run it on 4-hour charts and even hourly charts. Or if I'm trying to get into a position, maybe I'll even look at a 30-minute chart and do it. So, today, for example, we had a dollar CAD 4-hour or Canadian dollar futures 4-hour reversal. And that's like right here. So here's like a 4-hour Canadian dollar chart, right? And again, this is CAD futures, not dollar CAD. So CAD low is dollar CAD high. But you can see how I use this information to, leg into or get an idea for a trade in FX, and then quickly move to identified levels and trade it.
So I noticed that you're pulling in the volume indicators into TradeStation, and some of your viewers probably use TradeStation. I believe probably a lot of them also use TradingView. TradingView has volume indicators as well, so it's probably not the same measure, but would you say it's good enough?
I don't know, Kathy. That is on my list of things to do, is to try to figure that out, because you got to trust the data, right? And I guess if you're looking at TradingView, it depends on the market maker, the broker that you're looking at. When it comes to the futures volume, I know that it's from the CME. So like I know that this is like legit, and I'm not saying that the other stuff isn't. I just don't know. I don't have like a solid answer. I actually would like to program this stuff into TradingView and test it out and see how it works with that as well. So that's definitely on the docket.
That'd be nice.
Sounds good. Yeah, because I know that for the Forex symbols, there are CFD quotes also on TradingView, but I don't think they pull in the same type of volume fees. So the only volume fees, if you're using TradingView, as Jamie said, are from the broker, which is an interesting guide, and you'll have to do your own legwork to see whether it's sufficiently marks key congestion zones and there are good levels to watch. So let's take a look at the scoreboard and see how we're at right now.
I'm down $39.
We've got one trade from Jamie. Jamie, were you going to put on that last trade that we just talked about?
We did. The Ethereum trade hasn't triggered yet. It might. The first one, the one that we're looking
at for the coming week.
Oh yeah, well I mean, I'll put that in there. It's not getting triggered anytime soon. Like not during this session, but yeah, I will. Thank you for reminding me, Kathy. Hold on.
So John's all in. He's got his 3 trades on. He's he's got his money where his mouth is, and he's sitting nicely. Pound yen's giving him some nice profits. Euro dollar's giving him nice profits. So that's Ethereum's giving them some nice profits. A lot of times with these cryptos, they actually make or break our traders because they've moved so much more so than some of the FX
Tell
traders.
me on this platform what the like for volume on pound dollar, what's 10? Is that like in thousands, or is that like?
I think it should be 10,000.
So volume's 10. Okay, so
Yeah.
All right. Yeah, I need to know that. Pending order here. Okay, we're gonna put in.
So Jamie's got 2 pending orders on. The only live position is the one in Seoul. So we'll see how that works out. And, as I said, there's a lot of volatility during the week, and there's a very good chance that Jamie's levels will be hit, and at which point, things could change. But right now, John is so far the winner of today's trading battle. John, do you want to go ahead and talk a little bit about, how our viewers can get in touch with you, learn more about your trading style?
Yes, we're over here at Trading Strategy Guides. They can go into there. They can get all the information they need through Casey, and then we can teach them the ropes, teach them everything that it takes to pass a prop firm, to be profitable, and to actually keep it. I think that's the most important thing people need to learn, is how to steady flow after you've been crazy trying to get that thing.
Well said. That's something that a lot of people forget, and it's it's hard enough to make money, but it can be just as hard, if not harder, to keep the money.
Yes, right? A lot of people blowing accounts out there. You see it all over the YouTube. It's terrible.
Well, they think after you have some success, right, and then you get aggressive or whatever, and you get careless, and then then it's gone.
I just didn't think that 20 lots was going to go against me. I just didn't know.
Right. Yeah. I'm in 2 million on my small account. Yeah, exactly.
Yeah.
It's so different, I think, also from trading for yourself versus trading for a prop firm. And trading for yourself, it's really about keeping the money. Whereas trading the prop firm, you can swing for the fences some more because, in reality, it's not your money, right? So I think that skill is definitely important to learn. What about you, Jamie? How can our viewers get in touch with you?
Yeah, so again, you can go to Scandinavian markets.com, right, Trade, but if you want, idea generation, stuff like that, you can go to sbtradedesk.com. So it's sbtradedesk.com. You can go there. And
You also
obviously
have
I'm
a PDF.
on Twitter. I'm on Twitter a lot. So not as much as I used to be, but just @ and then my name, Jamie Saettele. So I'll post stuff every once in a while.
Okay, very good. And do you have a social handle at all, John?
Nope, no special handle. Nope, not whatsoever. I like to stay out of trouble.
It's
Stay
probably
hidden under the radar.
Okay, thank you so much. Both we loved having both of you on, and thank you so much for our viewers at home. We are really excited to have Jamie and John on and see how those trades work out next week, especially since we've got so much crypto on the books right now, and crypto is really moving. There's a lot of exciting things happening there. So I think it will be very interesting to see who comes up on top next week. So for our viewers at home, thank you so much for watching the Trading Battles, proudly sponsored by 8Cap. I look forward to seeing you at the next one.
All right. Thank you.
All right. Thanks a lot.